Alright, so here we are, currently sitting at almost $2,000 profit. Now I've risked close to 1% on a 100k account to gain 4,000, right? So basically 4%. And in this video, I'm going to break down the entire trade. So this is supposedly a live trading session. We'll go over the entire analysis so you can get into my mind and actually understand the trades that I'm taking, so you can potentially also take them, right? So the first thing that I like to do is go into the weekly time frame, right? You need to have an entire framework in order for you to take a trade. And the way I like to approach this is basically the same every single time, right? There's nothing new that I'm adding in these kinds of trades. It's always the same. So basically in here, what you can see is, are we going for the previous day high or for the previous day low? It's such a, at this point, iconic question. You know, it's a very simple one, but it's so effective that I just keep on using it over and over again. Now, in this case, it was clear to say that we'll go for the previous week high and not for the previous week low. Our already, to me, established movement onto the upside. So I'm referring to this bullish candle and this bullish candle. This is already indicating to me, okay, currently basically having established movement onto the upside. So we might as well just go with the trend and not try to predict reversals. Just on the weekly chart, nothing new. Now, to be fair, we are in a kind of consolidation right now. And with a higher risk reward, usually you wouldn't want to go for a consolidation phase, right? You want to have trending markets, whether it's going to be an uptrend or a downtrend. That's what you like when you're trading in higher risk reward. Now, if you're wondering why I'm trading a high risk reward compared to the usual low risk reward, it's because I have different models that I'm trading. Now, obviously, the win rate is not going to be as high with a high risk reward like that. It's not going to be 95% win rate compared to my other model. The edge is still quite significant, and that's why I'm still trading it, right? Now, what else can we spot on the weekly chart? We have relative equal highs. Now, you might be saying, why are those relative equal highs? Relative equal highs is when you have a swing high and then another swing high being relatively equal, close to each other. Yes, but just out of experience, when we go into the daily chart, those will be relative equal highs, right? So this was the entire framework that I am basically building off from in order to identify, okay, we will probably go higher and not lower. Now, people who do something like this, where they just zoom in and look for things that happened in the beginning of the year, don't do that. That's basically, I wouldn't say useless information, but as a day trader, the most you would ever want to look at is the monthly chart, and that is only in the case where the month has just started, just to get a direction of the entire move right now. But you wouldn't want to go ever past, multiple months of data if you're analyzing something, especially as day traders. Position traders, that's a different story. So going to the daily chart, so as you can see, we are breaking this down step by step. We are not just going, we have some kind of confluence on a 5-minute time frame, and then from there on we're just taking a trade. No, there's a little bit more into it. However, you can simplify this by a lot, right? I'm just giving you the full analysis, everything that is in my brain right now. But you can simplify this a lot, which I have also done in the other strategy videos, right? So from here on, what have I told you? Those are going to be relative equal highs. Now, even if this high is not a swing high on the 4-hour chart, right? You just sometimes have to go lower and lower until you find that relative equal high. Now, this is always going to be a little bit discretional, right? Because if you just keep on going lower and lower and lower, eventually, of course, you will find a swing high within that price point. If you go into the 1-minute time frame, eventually there will be a swing high. The question is just that, does that swing high matter or not? That's the kind of question you have to ask yourself. So it's not just that I have a swing high in here on the 1-minute chart and then I'm just trading onto the upside. It's more than that, right? So in this case, it is significant because we already had movement onto the upside. So if we did not have this entire push higher, then probably these relative equal highs wouldn't be something I would care about to begin with, right? So it has to be something that aligns with the previous buys that you have formed. If we were trending from, let's just say, this point on lower and broke this low basically, then I would look for these relative equal lows, right? If there would be some on the chart. So it always depends on the context that you are in right now. So further analyzing this entire trade, on daily chart once again, we had even more relative equal highs. We have taken them out, traded lower, took out liquidity from other people who basically longed at the top. They are already out, and from here on it's just very easy light work for us to go onto the upside. However, there's also going to be reasons why I'm going to set my stop loss to a break even, which we'll also discuss in a bit. But first of all, let's go on to the 4-hour chart. On the 4-hour chart, please don't zoom out all the way until you have a chart like this. We have done the analysis on the daily chart, so we have to zoom in. That's why we're going on a lower time frame, guys. So I can already tell you I am going to move my stop loss to break even. Now why is that? First of all, I have done this entire line representing the relative equal highs that we have identified earlier. Now what are the reasons why I'm putting my stop loss at break even? Because if we look at it from a premium to discount perspective, there is a chance that we will go lower, create a swing low, trade a little bit higher, create another swing low, and basically trade into the premium to discount. Now, of course, if we are trading into the premium to discount, we also want to see something that is within our discount range. So a lot of the times for the chart or for the price action as a whole, it's not enough to just go lower into the equilibrium and then just trade off of that higher. That's usually not what happens. You need some kind of level that is supporting your bias. So basically in this case, it's the discount that we are looking out for to then trade higher off from. Now, I'm not saying that this is going to happen, right? Because at the end of the day, you don't really know for sure what is going to happen and you can't predict the market every single time. However, it is a chance that we will go lower into this FEG, and I would really not want to be in a drawdown since we have already so much movement that we have gone higher. So once again, stop loss at break even, and that's about it. Because this is a very common mistake. Traders identify the premium to discount, the equilibrium, and that's just that, right? They just think, okay, we'll go bounce from the equilibrium. The equilibrium on its own is not really a meaningful level. Don't trick yourself into thinking that, okay, this level is some kind of magical, prediction that we'll go higher. It's just a way of measuring, okay, we need to go at least to this line to then go higher. Now, I'm not saying that this chart can't just reverse all the way from here and then higher, because there is still willingness to go higher. However, once again, in this case, I wouldn't want to risk it. Since we have already been in profit, why risk it to actually lose on the trade? So I might as well just get out on a break even. And if that's going to be the case, and I could have gotten profit, so let's just say we have a scenario like this, and then go higher, then it is what it is. And you have to stick to the psychology, right? Because if not, then probably you're not going to be profitable. Now let's get into the actual trade execution. What was going through my mind when I was entering this trade? Now, if you have seen the previous videos, then you know that I like to trade at 11 p.m. UTC standard time, right? However, it's not a set in all rule, right? It depends on the model, it depends on the situation. It has always different confluences, and in this case, I wanted to wait it out because I see this entire move as a triggery part. Now, this is supposed to tell you that we'll go lower, because if you go onto the daily chart, then the entire Tuesday candle, so this, by the way, Euro USD chart, then the entire Tuesday candle looked like that we'll go onto the downside, even though the entire chart is trending upwards, right? But in that moment of time, it looked like we will go lower. But in my view, this is just a way to trick traders out of their entire positions and not stick to their bias. Because if you stick to the bias, then you know that we will go higher because of the things we have identified earlier. If you don't go into the higher time frame to identify these kinds of things, then the trade will not work out because you don't have something to fall back into. Now, in this case, we had a lot to fall back into because of the relative equal highs. So in my mind right now, when we were just at the 11 p.m. candle, which is right in here, I wanted to wait it out. I wanted to see movement onto the upside. Some kind of movement that tells me, okay, now is the time to enter. After we had a big push higher, because those are relative equal highs. Now, there's a bunch of relative equal highs, once again, and it's aligning perfectly with the major relative equal highs on here, but more into that later. We had a bunch of different relative equal highs, whether it's going to be those, whether it's going to be those, a lot of different ones, right? So I needed just confirmation that now is the time. It's a lot of the times in the way I trade, it's not even about where's price going to go, but the question is, how well can I predict the price time-wise, right? Which is why I also have a low risk to reward model where that specifies where you basically don't have to care about the time as much. But when you're trading a higher risk to reward, timing matters a lot. So in this case, we had movement onto the upside. This is basically a whole market structure shift, right? Now, a lot of people see this that when they have a market structure shift, then it just fails them, right? And they be like, man, my market structure shift does never work. And how do you know which one is going to work? That is where the entire bias comes into play. If you are just trading this pattern alone, of course it's not going to work. A market structure shift is just a pattern like any other pattern in that sense, right? You need to have the entire framework, and only then this specific pattern is going to work. So we had a market structure shift, and we basically do the entire analysis the same that we did on a higher time frame. So we have traded higher, premium to discount. I want to have a level which we trade back into. Now I took a little bit more of an aggressive trade. I did not enter right at this candle, but I traded right when this bearish candle was about to start printing. And this was basically the move for me to go higher. Now, of course, this could have been timed better, or I could have at least waited for this FVGs. You know, here's going to be a lot of people, the hindsight professionals will be like, man, you could have entered on that FVG, on that BPR, on that premium to discount, whatever it is. But that is all hindsight. At the end of the day, what matters is you don't have to predict the price at the exact pip point, right? Not at the exact tick. Now, a lot of future kids, they like to do that, right? They are trying to predict the price by 0.0001 spread of pips. But that is not going to happen in here because that's unrealistic, and we are keeping it very realistic in here. So once again, could this have been a better trade? Yes, it could. But is it still okay to walk away with 2K profit basically? Of course it is. So from here on, I just let the trade run. And the stop loss that you have seen earlier was right below this low, right? Later on, after I saw movement onto the upside, I moved it right in here. This is where micromanagement comes into the play. And it's very important that you master this. Now, if you are just taking the trade as it is, most likely this will also work, right? Now I'm going to quickly set my stop loss to break even, just in case we're trading with a lot of money here. We don't want to risk anything. Now, once again, if you are taking the trade just as it is alone, then this is already a great strategy. But micromanaging your risk is going to be so beneficial, because when you see the trade running and it broke out this high, this is only the point where I moved my stop loss onto this low, right? This was the exact price point. Before that hasn't happened yet, I'm not moving my stop loss. So a lot of traders, after they get the initial push to the upside with this candle, for example, they just move their stop loss to this low and they just get stopped out because they were way too early with moving your stop loss. So there has to be logic behind you moving your stop loss. A lot of traders are like, man, never change your stop loss, never change your take profit. And for a lot of models and for a lot of traders, that is the best thing that they can basically do, to just take the trade as it is and that's it. However, if you're more advanced into a strategy and you have traded for a long period of time, then it's totally okay to move the stop loss and also to take profit. Because this, at the end of the day, is going to minimize my risk. For example, if we are going to this low, then most likely we will also break out the previous low. We are not going to reverse all the way from here lower to this low and then go higher. No, if we are going from this point on lower to this low, then we might as well just go and take out this low and also this low, right? What is stopping price from exactly taking out this low and then trading higher? Of course, it's going to trade lower. There's no point in moving your stop loss way sooner than you have to be. So there's logic behind it. We had a break of structure. Okay, now I know this low is not going to be taken out. Now this is going to be a step further. If you have seen the previous videos where I basically present a strategy, the entire presentation, where it's a little bit of a more edited video, right? Then what is this? Swing low, fall back into an FVG. That is a protective low. Most likely, this is not going to be taken out. In the different model that I showed you in the strategy, it depends a lot on the timing. If you're not going to trade it past 11 p.m., then it's not going to work as good. But that doesn't mean that this concept doesn't work on its own. You can trade this concept still in the right context. So I'm referring back to the protective low and high, but it has to be in the right context. If it's not in a framework, then it's not going to work. And this is basically for everything in trading. If you don't have an entire framework to build off or trade from, then it's not going to work. Now, further talking about how to actually manage your trades and minimize the risk. Once again, we have moved the entire stop loss to the break-even point. Not because we are scared out of taking a loss, but because it makes a lot of sense. So what have I told you previously? If we are trading back into this low after violating this high, which was responsible for the market structure shift. Now, I hope that you can follow me here. So this entire move was responsible for the market structure shift. Now, this entire move, when we have violated this swing high, is responsible for basically protecting our position, right? This was the logic behind the last one. Now, it is going to be the same logic. So you're basically just applying the same logic over and over and over again until either the trade hits take profit or stop loss, or even break even at that point. Now, this might seem a little bit complex what I'm about to show you, but it's very powerful and it's actually not that complex if you just look into it a couple of times. Now, which move was responsible for taking out this high? First of all, let's talk about why it's that high and not just a random other high. Because on the daily chart, that is a entire swing high in that sense, right? That is a significant point that we like to trade off from. So it's not just that I took a random swing high, it's the last swing high on the daily chart. So if we go into the hourly chart, now you have to ask yourself which swing low was responsible for taking out this swing high. Now, of course, you can go on a lot of different time frames because I've shown you everything else on the 1 hour chart. We're going to keep it on the 1 hour chart because the analysis aligned perfectly. So once again, which candle low was responsible for this entire price action move? Now, if you said that it was this low, then that is a good guess, but that is wrong. It is this swing low that was responsible for taking out this swing high. So this is why our stop loss is almost right below that low. So if this low would even stretch out all the way lower in here, then I would move my stop loss below this low and not even at break even point, because I know that most likely this low is not going to be taken out. So as you can see, this is not just me putting my stop loss at break even, but also tied with logic, right? If the low would be lower, then my stop loss would also be lower. And if price goes all the way lower, then I would still take, not the full loss, but still a little bit of a loss. So once again, behind every single decision that you do, behind every single take profit that you're setting up, stop loss, break even point, there needs to be logic behind it. Now guys, quickly before you're going to leave this video, if you're having struggles passing a profit challenge, in the description down below, I've linked down a video which is private and only exclusive to the ones that are watching my videos. And in there, you'll get infos how to pass your profit challenge risk-free. And also, if you want me to mentor you one by one how to actually take these trades, then my mentorship is in the description down below. Now, before the video is going to end, on the right screen, I've linked down the entire playlist regarding to this exact strategy that I've just shown you. And on the left screen, you can subscribe to the channel. Thank you guys for watching and see you guys in the next one.